All right, boys, XRP USD. Let's go. XRP is breaking out of the all-time high levels marked here on the monthly chart. So we're going to take a look at the monthly, drop down to the weekly and then the daily, and I'll give you guys my extension levels of potentially how far I think this may go and where I'm personally be taking profits. I got in last week on XRP on a 50% retracement pullback into a discount on the daily fair value gap. I'll show you guys my entry on this and where I'm going to be riding it to. My brother actually got in on this as well. He's the one who told me to buy it. He's an expert. I was going to pull the trigger, but there's a lot of moves on XRP particularly, and he sold me on it. So hey, I'm in it. I'm riding it. Let's see how high we can go. So monthly chart, we have all-time highs here. Okay, around the 196 level. This is a swing high. Okay, here's a swing high here. A swing high here, okay, and a swing high here. This was actually, I think, like close to like a double top, but that's okay. So boom and boom, okay. So when these highs were essentially created, okay, this is a signal or recipe for something called a low resistance liquidity run. Okay, it's called a low resistance liquidity run. When you have highs that are so close to each other like this, price typically would want to come back and take it out. Okay, and that's essentially what we're seeing here right now. So low resistance means we get a candle like this pushing up really quickly. This is the monthly chart, and this is this month. So this is December, November. Okay, let's dive down to the daily chart now. All right, so let's recap what we saw previously. Okay, we saw the market breakout here at these levels. Boom. Okay, that's a nice strong candle to the upside on the daily with big volume. Comes back, retests, rejects, and closes higher above. So where the body of this candle closes really shows the strength and significance of the move. Okay, so as the candle came down to these levels, it got bought up fairly quickly. Okay, and just the top of that body of these bodies. Okay, boom, and it got bought up and it really closed. It quickly shot away and closed up here. Okay, so this close as the candle traded down here and how it fast and moved back away from this support area. Okay, it shows how strong the move actually is, and this gives us a reason to continue up. All right. So as we had a little bit of a continuation here, I was looking for a 50% retracement from the previous swing low. So this would be a swing low here, okay? So when I do my fib, I'm doing it from the top to the bottom, okay? And I'm looking for essentially a fair value gap or a displacement at a discount. And what a discount means, it means I want to buy anything that's under 50%. You know, 50% off, I'm willing to get in. So here, that's the first displacement. We got another one here as well. Okay. And there. Okay. Went a little bit lower, but that's totally fine. So we didn't get that move at all. The market created a little bit of a bull flag pattern. Okay. We had a little bit of bull flag here. And then we quickly broke above. All right. So I'm just going to erase this here really quickly. And now we have another bullish move up. We have a break of a structure here. So this is a swing high. I draw the candle over like this. Okay. So the my line over like that. So that's a swing high. We had this candle breaking the structure and a bullish move up. And then we had a fair value gap from here to here. That's called a fair value gap. Okay. But hey, would I take this trade? I actually did. We're in this right now. And the reason for that is that when I draw the Fibonacci retracement, okay, from here to here, top to bottom, like so, okay, under the 50%, this fair value gap is valid for entry. Price came to the 618 of this move, okay, so it came to the 618 area here, right, 618 area, touched, and then quickly moved away. So as soon as it hit the 618, look where the body of the candle closed, all the way up here. So it actually closed away from the fair value gap. That's just signaling lots of strength. Came back, touched it, closed away. If you're looking at the daily candle, guys, like these wicks here, right? When it comes into fair value gap and it moves away, the body closes above, it means the fair value gap is very strong, very bullish. What we have here is a candle coming down, sweeping the previous day's lows. So the previous day got swept, okay? So this gave it a lot of liquidity to move and continue up from this area, okay? This also an order block that's being printed here. So the second entry would have been on this pullback, okay? So this is where we got in. Myself got in, my brother got in, and we're kind of riding this wave up, which is kind of bonkers. It's really nuts. Now, where can the take profit be? Okay, essentially, if this bull market does continue, where potentially can we see the take profit on this move? Okay, so let's go back to the weekly chart. And if we really want to hold, all right, if we really want to hold on this, now let's take a look here from the top of the move to the bottom of the move. Let's take a look at the extension here from top to bottom. And how far can we really go, boys? I think if we look at the doubling the from the bottom to the top of the range, if we go for the 2.0 or the 1-to-1 move, we could see price extend all the way up to about $3.66. That's where I'll be pulling the trigger to get out. If I'm holding this and we shoot up here fairly quickly, I'll pull the trigger, get out here, and I'll be potentially buying as price starts accumulating again and showing its hand. Simple and easy, straightforward. My price target is 366. That's where I'm looking to exit. Okay. If price continues to go up, that's fantastic. I made my money. If price comes down, this gives me another entry, buying at a discounted price. I'm buying a lot more units because I have a lot more money to put back into this. Okay. You never want to hold the bag too long. You want to pay yourself as the move is going up. Take profits along the way. Like for the boys who got in at lower levels and you've made a substantial amount coming up, take your profits, hold some in reserve. If there's pullbacks, you can buy at a cheaper price. Okay. My advice to you, don't get too greedy on this. We all want those Lambos and those sort of things, right? You always want to have a clear head. You want to take profits, pay yourself at liquidity levels, and as price retraces, you can buy more. Thank you for tuning in. This is King K signing off. Don't forget to like, subscribe, follow me on the Discord. Take care, boys.